Last week, three things happened in the S&P 500. The first one was the target. The S&P 500 hit the target of 6735. The second one was the loss. S&P 500 lost 3.65% from the top to the bottom. And the third thing is that the S&P 500 has entered into the short-term bearish trend through the lower level technicals. Now, question is that what forced the market to lose this much 3.65% or in the Nasdaq more than 5%? So for that, in my previous S&P 500 weekly technical analysis, I mentioned the pattern that there is a pattern and this pattern will be repeated. However, last time the weekly candle was very thin, very small, but this time the weekly candle will be heavy. Why? Because of the saturation and the overbought condition, especially in the Dow Jones. And you must understand that everything was under control on Monday because the closings and the low was still above the 6,800 psychological mark. But on Monday, it came into a pattern that triggered this heavy fall. And in my final update on Monday to my Patreon community members, I mentioned if the S&P 500 closes in between these two, in that case, it will be a very heavy bearish condition which indicates a gap down open tomorrow on Tuesday or irrespective of any open and initial or intraday bearish movement. Okay, a gap down open. Immediately after open equal to high condition and then come down to what? 6772 or the zone that was very near to the 6772. However, the good thing on Tuesday was the closing. The closing was, for the first time, the closing was below the 6,800 psychological mark at 6771. However, the most important part of the movement on Wednesday was the closing. The closing was again below 6,800 and this was the second consecutive closing below the 6,800, and because on both of these days, Tuesday and Wednesday, the S&P 500 tested and failed and closed below 6,800. This means there was the rejection. And then in my final update on Wednesday, I mentioned that closing of the S&P 500 below 6,800 at any level or in any form is a bearish condition because in this case, there will be two consecutive daily rejections from the 6,800. And in this case, we can expect limited bullish side movement on Thursday or Thursday onwards, and the bearish side will remain open to the 672x. So because of the two consecutive rejections on Tuesday and Wednesday, we have seen that next day S&P 500 failed to move up. It failed to even touch or hit the 6,800 psychological mark, and then intraday it came down and hit the target of 6735. So after my pre-market analysis, I mentioned the first update that the S&P 500 has now hit the target. But because the S&P 500 gave a closing on Thursday below the 672x heavy support level, that is why next day a gap down open fall, continuation of this the fall was supposed to happen. If the bearish movement was confirmed, the fall was confirmed, then why there was the intraday very heavy bullish retrace? For that, you must understand that there is a zone, very heavy support zone, the 664x slash 6x. So in my first update, I mentioned that any fall will be limited to this, the range, the heavy support range. Any breach will be recoverable. But now the good thing is that S&P 500 has fulfilled all of the pending obligations. And because I was certain that the obligation will be fulfilled, that is why this was the special case of SPY. Okay. And you can see that entry was 23. Okay. And exit was 29. This was the March 2026 expiry. Okay. Entry 23 and exit 29. Now in the coming week, whether the S&P 500 will continue the bullish retrace or will be able to retain its bullish trend or not, or if the fall will continue. So all of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of November 10th. Means from November 10th, which is Monday, through November 14th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will discuss the technicals, the weekly and the daily chart. And through the technicals, I will show you or I will tell you that whether there is a saturation or not, whether there is some more scope for the reversal, or if it will come down through the technicals. What will saturate the bearish side, what will saturate the bullish side, and what will be the trend, all of that in the technicals. The second part is the probable movement. In the probable movement section, I will tell you how the market, how the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market is going to behave or to trade. Percentage wise, how much fall or how much bullish movement we are expecting. All of that in this the probable movement. So guys, it is recommended that you should watch both of these sections, the technicals and the probable movement, in order to understand what is expected to happen in the market in the next week. So guys, now I am going to begin with the technical part. First, I will cover the weekly chart, then I will cover the daily chart. Okay, in this manner, it will be very much clear. The trend will be very much clear, and saturation, etc., overbought or oversold condition will be very much clear. So this is the weekly chart, and this is the weekly candle, last weekly candle. Okay, now so first the candle. If you notice this candle, the best part of the candle is that it is in the open equal to high condition. Open equal to high condition means that immediately after open on Monday it came down. Okay, this condition itself is bearish or indicates pressure. Second thing is that the closing of the candle is below the open, closing and low or high of the previous candle. All of this indicates bearishness or heavy bearishness. Okay, now it does not confirm or it does not indicate a gap down open, but it does confirm an initial or intraday bearish movement in the next week. And because this is the weekly candle, so this also indicates that the next week we can expect the pressure every day. Every day we can expect the pressure on the market every day. Okay, so candle means this is bearish. Now this is the last weekly candle of the Dow Jones. Okay, this last weekly candle of the Dow Jones is again in the open equal to high condition, indicating bearishness. Again, the closing is below the open, closing, high, low of the previous candle, bearishness. Okay, it is not confirming a gap down open on Monday, but it does confirm initial or intraday bearish movement on Monday. And for the entire week, pressure on the market. Okay, this pressure can trigger more fall. Okay, if the bullish condition, there will be a bullish condition if the all of the indices fail to gain, okay, or fail to get into that the bullish condition, then we will see continuation of the fall. Okay, again at least around 3% fall we will expect in the indices, right? So now let's cover the technicals. Let's see if the technicals have that scope. Okay, the bullish scope. Through the technicals, S&P 500 is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the weekly chart. Well, this is good. Okay, for the bulls. For the bears, no. Again, bulls. S&P 500 is still bullish through the MACD and is still bullish through the stochastic RSI on the weekly chart. It is a little saturated, means any more bullish movement can trigger saturation, okay, means more bullish movement is not sustainable. Okay, continuous bullish movement or more bullish movement is not sustainable in the S&P 500, right? Now this means that the S&P 500 is 100% absolute bullish, and there is a very big problem. It is 100 absolute bullish, trend is absolute bullish, the long term trend is absolute bullish. Problem. Okay, before I discuss the problem, let me cover the Dow Jones, then I will tell you that problem. Okay, the Dow Jones is also bullish through the moving averages, Ichimoku cloud and the Bollinger Bands on the weekly chart. Dow Jones is also bullish through the MACD and the stochastic RSI on the weekly chart. The same problem. Okay, saturation. Any more bullish movement will trigger the saturation in the Dow Jones. Okay, so saturation in the Dow Jones and saturation here. Okay, bullish movement. Now let's discuss the problem. Problem in the through the technicals. Okay, so for that, okay, you must understand. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get daily precise updates of the S&P 500, Dow Jones, Nasdaq every day from Monday through Friday, okay, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's discuss the problem. Well, problem is actually here. This is the MACD. This is the stochastic RSI. Well, stochastic RSI is not that the big problem, but MACD is. Now you must understand that MACD has come into the condition wherein limited bearish movement, any kind of bearish movement, or a red weekly candle. Remember, okay, I'm talking about the weekly candle. Bearish movement means by Friday, by next Friday means November 14th. If there comes a candle which is red in nature, okay, any kind of red, in that case, most likely there will be a bearish crossover in the MACD. Okay, but 100% there will be the bearish crossover in the stochastic RSI. Okay, but I'm more concerned about the MACD, because if there comes a bearish crossover in the MACD, then this will happen after May 12th of the week of 12th of May, means after 6 months, then it will happen. And because MACD gives a linear movement, and then there will be the beginning of the bearish cycle. Okay, at least the short-term bearish cycle around 7%, 5 to 7% fall we will see. Okay, in the market, in the S&P 500. 5 to 7% means from these levels back to 6,200 or 6,100. It will remain in the 6,000 range. Okay, but to the 6,100 or 200. Okay, we will see. Now, if this start to happen, if this happens on Monday, if there comes a fall on Monday, if there comes the bearish crossover on Monday itself, then this will bring more bearish sentiments in the market, and then for the entire week we can see fall in the S&P 500, in the Dow Jones, and in the Nasdaq, because MACD and the stochastic RSI will then align bearish. Okay, this bearish combination will trigger more fall. Okay, although we will wait for November 14th Friday to get the confirmation if there is a confirmed bearish crossover or not. Okay, but a confirmed bearish crossover means that there will be the fall. Okay, now the same problem is in the Dow Jones. Exactly the same problem is in the Dow Jones. Okay, so this means that all of this will happen simultaneously in all of the indices: Nasdaq, S&P 500, Dow Jones. Nasdaq is the index which is going to suffer the most. Okay, and in this the movement, in this the fall, okay, that the mostly it was a Nasdaq that has suffered heavily, which has suffered heavily. Okay, and in the coming period, if the bearish cycle continues, the Nasdaq will suffer heavily. Okay, Dow Jones will suffer least, and S&P 500 will be like in the mid of Dow Jones and the Nasdaq. And now this picture will be more clear on or through the daily chart. Okay, that how soon the fall will be there, right? So on the weekly chart, S&P 500 and and the Dow Jones were 100% absolute bullish. Now let's see how the S&P 500 and Dow Jones are doing on the daily chart. This is the daily chart. Okay, see, weekly chart means the long-term picture, the trend, the long-term trend. Daily chart means the short-term picture. Okay, in the short term, like for a week or so. And this fall was basically because of the daily chart, not because of the weekly chart. Through the daily chart, on the weekly chart there was a pattern. Okay, but the daily charts were also heavy. So this is the daily chart of the S&P 500. Okay, now let's first discuss the candle. This is the last daily candle formed on Friday, okay, of the S&P 500. There was very heavy bullish retrace, and in the second half, okay, this bullish retrace was actually, okay, it was seen in the second half. Okay, and at the time of closing also the bullish retrace was there. This indicates, okay, a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, the weekly chart is saying bearishness, initial or intraday bearishness. Okay, so I will tell you, okay, how this combination is going to work. But this is indicating a gap up open or an initial or intraday bullish movement on Monday in the S&P 500. Okay, through this the candle. Now The Dow Jones, the last daily candle of the Dow Jones, again exactly the same. Okay, gap up open or initial or intraday bullish movement on Monday. Okay, now question is that how this both of these things, gap up, oh, sorry, not gap up, but daily chart is indicating the bullish movement, okay, on Monday, and the weekly chart is indicating the bearish movement. Okay, for that you need to understand that the S&P 500 failed to come into the condition which could have triggered, okay, heavy bullishness to the 6,900 or to the 6,800. Okay, yes, definitely it indicates bullishness. Okay, the bullishness is there because why? Because it in the last hour it breached and closed at this the 6728.81 above the 672x level. It was supposed to close below the 672x level in order to trigger the heavy bullishness, means the recovery of the bullish trend. Okay, so that is, this means that whatever bullishness we are seeing, that will be limited. Now on Monday, so Monday, yes, we are expecting, this means that even if there comes a gap up open, okay, even if there comes a gap up open, then also it will remain in a condition because moving averages are there. Okay, then resistance, heavy resistance is there. This will restrict the bullish movement. Okay, the resistance, the moving averages will restrict the bullish movement. Okay, then that will trigger some weakness, some fall. Okay, in this manner the bullish and bearish will be there, and if for some reason there comes a fall or a gap down open for some reason, okay, then also because of this bullishness it will recover, it will try to move up. Okay, so this counter reaction, counter movement in both of these directions you will see here. Now through the technicals, okay, very tricky through the technicals. So if you notice through the technicals, S&P 500 is neutral through the moving averages on the daily chart, but bearish through the Bollinger Bands and bullish through the Chimoku cloud on the daily chart. The S&P 500 is bearish through the MACD and bearish through the stochastic RSI, the daily chart, and it is neither overbought nor oversold. Okay, no such saturation or anything. So S&P 500 in this manner is still holding in the bull side, is 60% bullish on the daily chart, just the 60% bullish on the daily chart, right? The Dow Jones is also almost the same. Okay, Bollinger moving averages, Dow Jones is neutral on the daily chart but bullish through the Ichimoku cloud and the Bollinger Bands on the daily chart, bearish through the MACD and bearish through the stochastic RSI, okay, on the daily chart. So as such there is no problem in the Dow Jones. Okay, the only problem in the Dow Jones is that Dow Jones has hit the oversold or the saturation in the bearish side. Earlier it hit the saturation and overbought in the bull side. Now it has hit the oversold and the saturation in the bearish side. Okay, so earlier Dow Jones has triggered the fall. Now Dow Jones will help the market to recover, the entire market to recover. Okay, but again remember, this is the daily chart. Okay, recovery for 1 or 2 days is allowed. After 1 or 2 days it will be out of the saturation, it will be out of the oversold condition. Okay, and then it will be back into and if it fails to clear the key resistance levels or the zones, then again there will be the fall. Okay, continuation of the fall in the manner. Okay, this is the staircase pattern you will see, right? So the S&P 500 is 60% bullish on the daily chart. Dow Jones is 60% bullish on the daily chart. Okay, but with a problem that the MACD is bearish, stochastic RSI is bearish. Okay, at the same time Dow Jones is at this the bearish side, saturation or oversold. So it's a very tricky situation. However, that's not a problem because we know that what it is or how it is going to behave, and that I'm going to discuss in this the probable movement section. But guys, before that, let me tell you that whatever is going to happen or whatever will happen, I will keep you posted or I will keep you updated through these daily precise updates of the S&P 500 every day from Monday through Friday. Okay, pre-market analysis before the open of the stock market. First update after 1 hour, midday update after 3 hours, final update 1 or 2 hours before the closing of the stock market. Okay, so every day these updates back to back, every day, Monday through Friday, these precise updates. And that's not all. And I gave 50 to 8080 premium opportunities in the premium stocks of the US stock market every month. And the win rate is more than 80% or 80 or 85%. Okay, and that's not all, because I also gave the mid-week update. This mid-week update is a video technical analysis given every Wednesday or Thursday to my Patreon community members. And in this, the mid-week update, I discuss all of these, the conditions, all of the conditions of the bullish movement, bearish movement with the precise levels, precise numbers, precise zones, everything. So guys, whenever you want to join my Patreon community in order to get these daily precise updates of the S&P 500 from Monday through Friday, then I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see the button, this button or tab, it says membership options. And when you click on this button or tab that says membership options, then you will see that there are these the three levels or these three tiers. This is level 1, this is level 2, this is level 3. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, pre-market analysis, first update, special update, second update, final update, etc. And also the opportunities in the premium stocks and the ETFs and the midweek update videos. And in this manner, they are very well aware of what is happening, why that is happening, and what will happen next. So guys, if you also want to join my Patreon community in order to get all of these, the daily precise updates and the opportunities and everything, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda, the second part of the agenda. And here I will give you the probable movement of the S&P 500, means what is going to happen in the S&P 500, Dow Jones, and in a manner to the entire US stock market in the next week. Means the week of November 10th. Means from November 10th, which is Monday, to November 14th, that will be Friday. Now, probable movement. Okay. But before that, you must understand that because of the government shutdown, okay, in more than it's been over a month. Okay, no significant data was released. However, in the coming week on Thursday, the inflation data is scheduled to be released, but we do not know if they are going to release this data or not. Then on Friday, the retail sales data. And if this data is not released, see, again, this starts from Thursday. So Monday, Tuesday, Wednesday are blank. Okay. So if this does not happen, that data is not released on Thursday and Friday, then the movement of the market will remain normal as is through the technicals. Okay. No sharp, heavy gap up or heavy gap down. Okay. Because the data will not be there. Secondly, the earnings season is almost over. Okay, so no help through the earnings or so. Now, in terms of the numbers and the movement, now what we know is that, okay, first, I've discussed, okay, on the weekly chart also and on the daily chart. First, on the weekly chart, what I mentioned, that any bearish movement, okay, it will 100%, it will trigger the bearishness in the stochastic RSI, okay. So, stochastic RSI will go bearish. Then it can also trigger the bearishness in the MACD of the S&P 500. And if that bearishness is seen, then we will be ready and we must be ready for more fall, like 5% or so. Means in the 6,000 range to 6,100 or 6,200. Then there will be more fall. Okay, it was clear through the weekly chart. And what was clear through the daily chart is that the MACD and the stochastic RSI are already bearish for both the S&P 500, Dow Jones, and also for the Nasdaq. Means by default the bearish pressure is there. Secondly, the Dow Jones, this is the Dow Jones. Dow Jones is trading in the saturation in the bearish side. Okay, means continuous fall can happen, but only for one day, maximum 1 day or 2 days, but not more than that. Okay. Continuous fall is not allowed. Not allowed, because this will then force the Dow Jones to hit the saturation level, the historical level, and then we will see very heavy bullish rally, very heavy bullish rally. Okay, because of that. So as of now, just one day fall, okay, maximum 2 day. If there comes a fall on Monday, okay, then in my midday update and final update, I will okay, I will mention its impact. Okay. The Dow Jones, the only problem in the Dow Jones is the saturation in the bearish side. Earlier it was in the bull side that triggered the fall. The bearish side saturation will trigger the bullishness. Okay. So because of the candles, what we know is that there will be an initial or intraday bullish movement or a gap up open on Monday. But because of the bearishness on the weekly chart, there will be the initial or intraday bearish movement. What does this mean? Okay, we have 672x. 672x is heavy support. Okay, the closing was above the 672x at 6729 approx. Okay, now after that, okay, there comes the moving average around 7 in the 674x. Also there is a level in the 674x. Combination of the moving average in the 674x in the 674x makes it very heavy. Bullish movement is allowed. This means bullish movement is allowed, but to the 674x. However, earlier the 677x was acting as the heavy support level for the S&P 500 or the tiebreaker, and it helped the S&P 500 to sustain. So a breach of 674x can happen without any problem. Not a problem, because see, if you see the pattern, okay, so how the pattern will form. For the pattern to form, okay, it has come down, then it should move up, and then it should come down. Okay, this will be a very clear pattern, very clear pattern. This pattern was also visible here, but then it was visible when it was moving up intraday. Okay, it has given up. Okay, so now it is again there, but to the limited, and then the fall, right? So the staircase pattern will be there, right? So means for now any bullish movement will be allowed to the 677x. Okay, that's it, 677x. Okay, whether it will be able to move to 677x will be defined by 674x. Okay, so bullish side we have 674x. 674x is also supported by the moving average. Then comes the 677x. Okay, now any bullish side movement will be limited. What if there comes a news, a geopolitical news, okay, or the president says something positive, means something positive happens for some known or unknown reason. Okay, something happens and the S&P 500 breaches and closes above the 677x, then what will happen? In that case, the bearish side is over, bullish side is open to the 6800. Now just for the confirmation, we will be needing a closing above 6800. Okay, that's it. Once there comes a confirmation above the 6800, okay, then the normal bullish movement, resumption of the bullish movement, continuation of the bullish movement, that's it. Okay, then in the 6800 there will be the zone. It will be moving to the zone. From that zone, okay, the S&P 500 will fall. Okay, but then that fall also will be limited to the 6800 or to the maximum to the 677x. But the most important part of that movement will be the continuation of the bullish movement, the confirmation that the bullish movement will continue. That will be the most important part of that, the movement, right? So bullishness, okay, we have 674x, we have 677x. Okay, that's it. What if the S&P 500 fails to move to 677x? It moves to 674x. Okay, closes below 674x. Okay, breaches but closes below 674x. Rejection. What will happen when the rejection will be there? Fall. Okay, then movement and fall. That's it. Continuation of the bearish movement. See, the bearish movement will continue as long as the bullish retrace is only up to the 677x. 677x is restricting. The closings are below 677x. Okay, that's it. So bullish side is allowed in the bearish movement, but up to the 677x. Okay, and a failure from 677x means fall. A failure from 674x means good fall, because it indicates the pressure. It indicates the pressure. Okay, and after 677x, bullish movement, continuation of the bullish movement. Okay, continuation of the bullish movement in the 6800 range, right? Now, bearish side movement is what is tricky, and what we should what we must be focused on, because the market has entered into the bearish side through the lower level technicals. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far, if you have liked this video, then give a thumbs up, hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, bearish side movement, what we know is that 672x closings must be below 672x. Hourly closings, 4-hourly closings, daily closings must be below. Even if hourly, 4-hourly closings are above 672x, no problem. Daily closing must be below 672x. Because this fall you are seeing, this heavy fall 1.2% or so on Friday, okay, was because the closing on Friday or closing on Thursday was below the 672x, and then this triggered the fall, right? So closing matters. This means a closing below 672x will allow the S&P 500 to continue its bearish movement. Now, whether it happens on Monday or Tuesday or Wednesday, whenever it happens, okay, then this will be applicable. Because if the S&P 500 moves up, okay, let's say initially the S&P 500 moves up to 674x to 677x, okay, in that case the bearish side will be restricted to the 672x. To the 672x only, it will remain restricted to the 672x. Okay, the bullish side will be there, okay, to this. So it will trade in between these two or these three. Okay, fall will happen or the bearish movement will continue only when there comes a closing below 672x. Okay, now why the closing will be below 672x or why the fall will be there, we must understand. MACD is bearish, stochastic RSI is bearish on the daily chart. MACD and stochastic RSI are going to will be bearish, okay, on the weekly chart. See, it is not just the red candle, okay, on the weekly chart, but even a limited bullish candle will also trigger the bearishness on the weekly chart, okay, because the calculation, okay, it is done in that manner. So it will also trigger the bearishness on the weekly chart and the daily chart, right? So this means that if the S&P 500 remains up to the 674x, then also the technicals will change to bearish, okay, because the technicals MACD and stochastic RSI are bearish and will be bearish on the weekly chart. And if you have subscribed to my YouTube channel for last many months or years, repeatedly I mentioned, whenever MACD and stochastic RSI are bearish, then the market is bearish. Whenever both of these are bullish, then the market is bullish, okay. These are the key indicators to the bullishness and bearishness along with the other technical indicators, right? So now for the movement, what we know is that we need fall, at least one closing below 672x, okay, but because the closing was below 672x and still it retraced and closed above the 672x, so now we'll be needing back-to-back consecutive hourly back-to-back hourly closings below 672x and then one daily closing below 672x, and then it will be confirmed that yes, now the bearish movement is or will continue. And when the bearish movement will continue, then what will happen, where it will be heading to? Again it will be heading to the range or the zone that has helped the S&P 500 to sustain 664x/6x. Okay, the heavy support range, it will hold the fall. This range will hold the fall, okay, not permanently, no, not permanently, because it has already supported the fall, at least for 4 hours or 1 day maximum, that's it, Okay, not after that, because if there comes hourly closings below the zone, below the range, and the daily closing below the range, then there is no support, no more support. Then S&P 500 will be compelled. S&P 500 will be compelled to enter into the 6,500 range. Okay, and when it enters into the 6,500, then to what level it will be coming down? What was the low of this candle? Low was 6550.78. 6550.78. Okay, earlier it was clear, it was very much clear that the movement of the S&P 500 will be within the candle itself. Okay, the high and the low. Only when there comes a breakout condition, that was there on 24th of October, there will be the movement, otherwise will remain oscillate in the in between. Okay, in this the candle, right? So this means that S&P 500 will be coming down to, or maximum it will be allowed to come down to the 6550.78. However, S&P 500 will show its reluctance, to lose the 6550.78, because once this is gone, then S&P 500 will be ready for the 6,300, 6,400 and the 6,300. See, below 6,000, below 672x, 672x is the key level, that will tell us whether there will be the short term or the continuation of the bearish movement or not. Continuous movement below 672x allows fall up to the 6550. Okay, 150 points, 170 points. Okay, so it's around 3% fall. It allows that 3% fall. The 674x, 6x can hold but not fall long. Okay, it allows that much of fall. That is why 672x is very heavy, 674x is there, 677x is there. These three are very very heavy and very important. But on the daily basis through the updates, okay, I will mention, okay, whether there are chances for the fall or if the recovery will continue. Okay, so this means that for now the fall will be limited to the 6550.78, but it will show its reluctance to lose the 6550.78. Okay, this means 672x is the tiebreaker between the bullish movement and the short term or long term bearish movement. Okay, for the confirmation 677x. Okay, for the absolute confirmation 6,800 in the recovery. Okay, below 672x only the zone will hold 664x, 6x. After 664x, 6x, there is nothing that can hold, and the fall will be up to the low of this candle. Although initially it will show hesitance, reluctance, because a breach and a closing below the zone means 6,400, and then eventually to the 6,300 the fall will be there. Okay, one more thing guys that you should understand, when I say the fall, okay, or the rise, so the market never moves up in a straight line or never comes down in a straight line. Means every day you will not see red candles or every day you will not see green candles, because if this happens, this means heavy counter movement will be there. Okay, so let's say, so it was coming down, then it gave green candles. Okay, then it gave green candle, coming down, then gave green candle. Okay, it can give one more green candle, then fall, then green candle. So that will be the kind of movement. Okay, this is the natural flow of the stock market. So for this, the bullish and bearish side movement, it will be very much clear on Monday. Okay, or at most on Tuesday. Okay, and in my updates to my Patreon community members, okay, I will clear and I will confirm, okay, the bullish and the bearish side movement. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.